I want to bring up this one right here by Peter Kim. Peter Kim says 25% because you add another 35K and you can do 2 properties. Let's talk about that.
Interesting. So I love this. In, let's call it, average real estate investor circles, average investors are so fixated on only one profit center. They say the best deal is totally based on how much cash flow can it provide for me. But what we're hearing here in the not your average investor community, which we're here, I've had you say slightly cash flow negative is actually the best for you. And Peter Kim says 25% down may be best for him because if you put less down, you can add more properties and your money is even working harder for you at 25% down than at 30%. So if you're somebody that looks at this as 25% down, you're probably somebody who says a couple of things. Either you're willing to go cash flow negative without other sources of income to supplement it, which some people are a little bit more speculative that way. And you want the bigger pop down the line. You are focused on the best return on investment. 25% down might be the best plan for you. What I hear often is high net worth individuals who have a considerable income coming in that have excess savings each month. They start to look at it and they say, well, maybe 25% down is the right amount for me because I'm already taking more than $1,247 a year, and I'm putting that in savings or I'm putting that in some other investment vehicle. And they say to themselves, well, if I put that additional $1,247 a year into this investment, it's going to produce a better return on investment than my alternatives. And so if you're a high net worth person, if you have a lot of excess income, 25% down might be the best approach for you. And we put plans together to do that. And why are we doing that? Because our job is to produce the best risk-adjusted return for you at your time of liquidation, or as long as you want to hold on to the properties. And that might be 10 years down the road. So technically, if you came to me and you're like, how can you make my money produce the most for me over 10 years? The answer is putting 25% down or even putting 20% down. But that doesn't mean it's right for everybody. That's where that planning component and working with a team like ours that has seen this example and your example and thousands of examples can come together to build the right customized plan for you.
Yeah, I like it, man. When I think of that psychology, well, first of all, Michael Pedro Santoris over here says, if you're earning a good income with your W-2 paycheck and need the deductions and have the cash, put 25% down. If you have a lot of cash but looking for cash flow, put down 40%. Well summarized.
Absolutely.
Mike Foster says his son put down 20% so he could afford to buy a second JWB property.
I love that.
Which is great. I think of that. I think of that psychology of putting 25 or 20% down or even 30% down. It's not too unsimilar to how I think of my 401k, right? Like you can invest in all sorts of things in your 401k, but you're used to every single month, 5%, 10%, 15% of your income going into that thing. If you think about rental properties as, hey, that 1247 of cash flow negative in year one of 25% down, that's what, $100 a month?
$100 a month.
Right. So if you just think of automatically taking $100 a month out of your paycheck and going into that, now, you know, it's the same psychology as investing into like an automated kind of thing that people have set up. You just got to think about it a little bit differently. And if you're there for a long time and you know your income's going to go up over time, you know, your cash flow is going to go up over time just from the property, and you can afford to like put that mindset aside of like what, you know, my grandfather always said, save 10% of your paycheck, you know, and put it that way, it's pretty much the same thing.
Yeah.
Or very similar.
I mean, this concept of putting money into investments on a monthly basis or an annual basis is something that people do in many other places already, and they're cool with it. Your 401k example is a great example. Like, I'm comfortable putting money into my 401k every paycheck. I won't say most Americans, but many Americans are comfortable there. But for some reason, in average circles, when it comes to rental property investing, people are like, listen, if it's not cash flow positive, it's not paying me cash flow every single month, I don't want to hear about it. It's a bad deal. But the numbers say otherwise. That's why this is the not your average investor community, because we look to all 5 profit centers and your total profits and your return on investment will actually be higher if you are willing and able to go cash flow negative. So that's not saying that that's right for everybody, but I think that might be the most controversial viewpoint that we might go through today, because everybody's sort of on board with, hey, if it's cash flow positive, I'm good. You know, but I do want to point out that we put plans together, just like Mike Foster's son we just talked about, right? that plan for you might be less than 40% down or less than 35% down. And that might be the right thing for you. And, you know, I know a lot of folks, I know the down payments required and purchase prices have gone up a lot in recent years. You know, there's a significant opportunity to get in for less down payment if we can make sure we solve the cash flow solution. And then, you know, if we're looking at all 5 profit centers.
Our boy Sergio Preto, Go Gators, says net cash flow positive break even for me every month. We're here for that good time.
I love it.
So, you know, and we've talked about that a lot. There is a benefit to being net cash flow positive every month because, again, it's a little bit more scalable in the sense that, like, if you are getting to it every single month and it's net cash flow positive every month, you can keep stacking properties because it's not going to like then mean like, all right, now I got to save 20% of my payroll. Now I got to send 30% of my payroll. But at the end of the day, you just got to wait a little longer and save a little bit more money in order to put it in, right?
Yeah, and we should go through, you know, I would say for a first-time investor, the general feel is we're going to set up the plan based on cash flow positive right off the bat. You know, I'm assuming they don't have other sources of passive income coming in. It's their first time investing with us. There's a whole lot of tangible value beyond just the dollars and cents to make sure this is paying for itself every single month. So that's sort of where we start. That's where I started, you know, 18 years ago when my first rental properties, I was putting a plan together for myself to make sure it was at least cash flow positive. So I would say if you're a brand new investor, that's probably where we will go. Not every time, but that's more likely. As you get to be a more experienced investor, if you are a member of JWB Elite, which means that you own at least 5 properties or you own at least 10 properties with JWB, we're going to start to have conversations about what are you doing with that excess cash flow that comes in every single month? And if you've got $2,000 of excess cash flow coming in every single month, and you're just tucking that away and putting that into a savings account somewhere, and you don't need it, we might say, hey, why don't we go and buy the next property at 25% down and use that cash flow in a way to produce the best risk-adjusted return for you so that in 20 years, when you want to liquidate this thing, we built a bigger pile of money for you, right?
Yeah, that makes sense. And again, that is, if you want to have that conversation and get detailed on your situation and like, you know, look at your financials with somebody that knows how to look at this stuff, go to chatwithjwb.com, schedule a call. You could do it. Vincent Barberite says, I currently own 3 properties with JWB since 2018. Do current clients go to chatwithjwb.com to schedule a call as well?
Vincent, first of all, thank you for your trust. It's been a pleasure serving you since 2018. For a current client like Vincent, just go and reach out to your JWB portfolio manager. You have their contact information. That's the best thing for a current client. And if you're a new client, generally you'll want to go to chat with JWB and set a call or send an email. Anybody can send an email. info@jwbcompanies.com. If you're not sure if you're a client yet or not, just go there and we'll make sure we get you set up.